Hello, everybody, and welcome back to FACIPAs and Consultants. As usual, here we are with our CPA, Fulton Abraham Sanchez. Good evening, Fulton. Welcome back.
Thank you, Monica. How are you doing?
I'm fine, thank you. So, for the ones who are new in our channel, this is a video series called Tax Talk, where we are going to talk about the different tax strategies that you must follow according to your situation. And we will answer all the questions received through our social networks, which you will find as well in the description of this video. We have already talked about 4 main topics, and due to the number of received questions, we decided to talk about U.S. Expats Tax Forms. We'll have our top 8 ranking of forms. So Fulton, are we ready?
Yes.
Okay, top 1. What is Form 1040, U.S. Individual Income Tax Return?
Okay, that is the customary form for reporting your income tax. Form 1040 is like the face of the return. It is a form that summarizes all the income and taxes that you paid from the different sources. It's just 2 pages that reflect your income, your deductions, and your taxes to pay.
I see. And what about Form 1116, foreign tax credit?
Okay, Form 1116, foreign tax credit, that is the form that is used when you pay taxes in the foreign country. And because remember, we did this in the previous video, as every US citizen and US resident is obligated to report the worldwide income earned in any country. They have to report that income in the US, in the foreign tax return 1040. They can claim a credit for the taxes they have paid over that income reported in the foreign country using this form, the foreign tax credit.
Got it. And when to use Form 8833, treaty-based return position disclosure?
This form is only used when you are receiving income, or you are or you're living in a country that has signed a tax treaty with the U.S. like Spain, Mexico, France, UK. Those countries, if you have income there and you pay taxes there, the tax treaty will help you not to pay taxes again for the same income here in the USA. That's when you use this form, but it's only when there is a tax treaty signed.
Understood. And can you tell us about Form 5471, information return of U.S. person with respect to certain foreign corporation?
Okay. This form is when U.S. citizens and U.S. residents own companies outside of the U.S. This is only for corporations. For partnership or LLCs, is another form. This is only for corporation. That's why the title is Information Return of U.S. Persons with respect to certain foreign corporations. It's only for corporations. So if you own a corporation and you meaning you have a stock over 10% in any corporation, in any foreign corporation, either you are in the U.S. or you are not living in the U.S., you have to use this form to report the balance sheet, income, assets, liability, and equity, and also the profit and loss, income and expenses. And you have to report the transaction between the company and yourself. If the company has given you loans, the company have made payments to you, dividends, you have to report that. You have paid interest, you have loans with the company has borrowed from you, you have borrowed from the company. All that you need to inform in a yearly basis in this form.
Okay, and what about Form 8865, return of U.S. persons with respect to certain foreign...
This is for partnership. Remember, return of U.S. person with respect to certain foreign partnership. This is for LLCs. When you own LLCs in a foreign country and you receive income, any type, and you receive income and you have transactions with that LLC or partnership, you have to report here. In addition to that, you also need to report the assets, liabilities, and equity. You also have to report the profit and loss, the income and the expenses, and any transaction that you and the partnership, like distributions, loans, interest received, interest paid, anything that is between you and the entity, providing that you are a 10% or more member of the partnership.
Okay, and can you let us know about Form 8621?
Okay, the information for returned by a shareholder for a passive foreign investment income. Passive foreign investment income is any entity, this is, in this case, is for both, because there is not partnership. This is for corporation and for partnership, Form 8621. Passive income is any entity that owns real estate or receive royalties, anything that is not active, where you do not participate actively in the consecution of the income. When you rent, when you buy real estate, you don't work in the real estate, you only receive rent. The real estate is the one producing the income. Same thing applies if you are receiving royalties, if you are receiving dividends, if you are receiving anything that is passive income, any passive activity. Passive activity is when you do not participate actively, physically or mentally to produce the income. When there is a company that you do not participate, you do not or actively or mentally to produce the income, you have to use this form to report whatever you have received from the company in terms of distributions, dividends, or any other type of income like interest that you have with this company.
Got it. And what is Form 3520?
Form 3520 is the annual return to report transactions with foreign trust and receive or certain foreign gifts. This is two parts. The first is if you have a foreign trust. If you are a U.S. citizen and you are a beneficiary of the foreign trust, you have to report that position to the IRS using Form 3520, annual return to foreign transactions with foreign trust, because the IRS will penalize you for $10,000 if you don't do it. So you better report using Form 3520 if you have a foreign trust. Even if you do not receive money, it is enough if you are a beneficiary of the trust. If you are a beneficiary of the trust, you have to report to the IRS the entire position. What is your interest? What is the trust, and where the trust is located? That's one. Second, the other use of the Form 3520 is when you receive gift from foreign individuals over $100,000. You can receive any amount of U.S. citizen or an U.S. residents can receive any amount of a gift from foreign individuals and pay no taxes. The foreign individual will not pay taxes either because he's not in the U.S. He or she is not in the U.S. So it doesn't really matter. What matters is that you can go with no reporting be below $100,000. If you receive $100,000 from any foreign citizen, from any jurisdiction, in any type of asset, either liquid asset or any type of asset, including cryptocurrencies, you have to use this form 3520 to report the amount, the entire amount that when you receive a gift over $100,000. You are not going to pay taxes, but the IRS needs to know that you have an asset with the objective of that you include the income that this asset is going to produce in the future in your income tax return in the US. That's why they want this information, to do the match, because the asset is going to produce income in the future. The IRS wants to know what is the asset, and if it's going to produce assets, income in the future, to match that information to your tax return. So in the future, they will be able to catch you if you don't report the income from that foreign asset that you receive as a gift.
Okay, understood. Yes, really clear. And we have the last one of our ranking, Form 3520A. What is that form?
This is this form in exchange is for when you are the grantor of the trust. The Form 3520 is annual information return on a foreign trust with a U.S. owner. This form is when you, as a U.S. citizen or U.S. resident, creates a trust in a foreign jurisdiction. That is called the grantor. When you are the grantor of the trust, meaning you are granting your assets to a foreign trust in a foreign jurisdiction, you, as a U.S. citizen, needs to report that to the IRS and say, Messrs. IRS, I am a U.S. citizen, I am a U.S. resident, I have created a foreign trust, and I have titled my assets to this foreign trust in these categories, in these classifications. So the IRS will know that you are granting these assets and to whom you are granting these assets, either in the US or outside of the US. This is more for the one that creates the trust, not the beneficiary. The Form 3520 for beneficiaries. Form 3528 is for the grantor, the creators of the trust, when they are US citizens.
Understood. Well, that's it. Thank you very much, Fulton, for the information, because thanks to that, now we have our top 8 U.S. Expats forms. So if you have further questions, please do not hesitate to send us an email or to write it in the comments below. Be sure you have subscribed to our channel so you can be notified when we publish a new video about taxes. Thank you, everybody, again. Thank you, Fulton, and see you in the next video. Bye-bye.
A pleasure. Thank you. Bye.